Stocks stage a strong comeback after the sell-off late last week. Realty and energy are the big gainers while healthcare drags.
Kotak Mahindra Bank sees margins crimp a little more than peers, even as the management is hopeful of improvement going forward. Most analysts remain positive, but valuation concerns linger.
And the Supreme Court allows a review of the AGR matter, saying it sees no reason to not allow the centre to reconsider the policy issue. The Apex Court's landmark observation allows the government to offer relief on AGR dues to Vodafone Idea.
SBI Life reports strong performance in the second quarter. Margins ahead of street expectations on better product mix. Growth in the second half of this year also expected to be stronger. The stock perks up.
Eyewear player Lenskart Solutions plans an over 7,000 crore mop-up via its IPO priced at 10 times sales and 230 times earnings. The management counters highlighting a long growth runway in India and overseas.
Hello, good afternoon. You're tuned into CNBC-TV18. You're watching Halftime Report with me, Vinny Motiwala, Mangalam Malu, as well as Ekta Batra. We're coming live from the CNBC-TV18 Motilal Oswal studios. Thank you so much, as always, for tuning in. And today seems like the momentum we saw last week. Last couple of days of the week was not that good, but overall the week ended on a positive footing last week. This today, when you start the week as well, good day coming in. 0.8% of gains. Mid cap, small cap, that's also managing to hold on to gains, as well as banks doing well.
Good day today indeed. You know, you have the Nifty very close to that 26,000 mark. The level last week that we hit was 26,104. Let's see whether we go past that or not. And if you look at the contribution chart of the Nifty as well, you know, all the heavyweights are batting for the bulls today. We have Reliance, which obviously post its numbers has been a solid support for the frontline index. And today we have HDFC Bank, which is doing well as well. So the top two heavyweights doing extremely well. Bharti Airtel, though marginally off highs, we are seeing that stock as well among the top contributors. The market breadth fairly advancing. And finally, we have some clarity on Vodafone Idea as well. The street likes it. The stock has seen a big move. In fact, that has been the story of the last hour or so. Vodafone Idea doing extremely well. That's about Reliance, but pull up the intraday chart of Vodafone Idea. You'd see that and the contribution chart. Hi.
Yes, so Vodafone Idea, hi guys, is the big story of the day at this point in time. So that stock is up around 5% but we do have a lot of other stocks in focus. So we're going to kick off the show with our movers and shakers segment, where we're going to track a whole host of stocks which are buzzing in trade. And Vinny, let's kick it off with you. You're watching eClocks.
Absolutely. eClocks, good numbers that have come in from the company this time. When you look at it in terms of the growth, 8% growth in terms of revenues. This is obviously on a sequential basis that we're comparing it. EBITDA margin seeing a good improvement of around 300 basis points. We're seeing profit seeing an improvement as well. So yes, 141 crores is what the profit was last time versus this quarter, 183 crores. So that is around a 31% growth in terms of profitability. CC growth in terms on sequential basis, 5.4% CC growth. Now, what is leading to this good performance? Overall, there were new deal wins that came in, ACV deal wins, which were worth around $46 million versus last quarter of around $32 million. So strong in terms of deal wins, new deal wins. Other than that, they've seen good growth across most of the sectors, except BFSI as well as fashion and luxury. Other than that, everything has done well. Geography-wise, also decent performance across geographies. Cash and cash equivalent on the book stands at around 1,250 crores. They've headcount has also seen an increase this time. So there's an increase of around 1,030 personals during this quarter in Q2 FY26. And do not forget, they've announced a buyback that is proposed at a price of 4,500 rupees. So today the stock is buzzing. Good numbers is something that is keeping the stock a buzz. And that's what we're keeping an eye on.
All right, that's about eClocks doing fairly well in today's trading session, up around 7%, but it's a mid-cap IT sort of day as well. We're getting good numbers coming in from others as well. Coforge, for one, has been fairly strong. Commentary as well, good from the management for the second half. Rima joins in with more on that. Rima.
Thanks so much for that. As you pointed out, revenue growth strong, 5.9%. EBIT margins have improved by 80 basis points, hitting 14%, which was the company's goal. And not just that, even on free cash flow, where analysts were a bit concerned, the company in the current quarter achieved 85% free cash flow as a percentage of PAT, which is within the company's guidance of 70 to 80%, and the company is talking about maintaining that. And the second half of the year is also going to be very robust. H2 particularly is going to be strong, and for the full year, they're talking about maintaining margins at 14%. So it's done well on revenues, it's beaten expectations on margins, and it's allayed concerns on the free cash flow. JP Morgan has an overweight rating. They said that the company needed to deliver on margins and cash flow after the challenges last time, and they did exactly that. Jefferies too has a buy call, and they say the free cash flow conversion should allay concerns about profitability and the quality of growth. Morgan Stanley has raised the target price to 2030. They say with the Q2 print, the company has allayed several investor concerns, and such consistent execution on all fronts creates re-rating potential. And Nomura says Coforge is the top pick in the mid-cap IT basket.
Okay, all right, Reema. Thanks very much for that. So Coforge, as you can see, that stock is up around 4%. But we do have Vivek now joining in to take us through all of the stocks that are buzzing around at this time in trade. Vivek, over to you.
Well, thank you so much for that. Last half hour, especially the telecom pack has moved up higher, but in the broader markets today, not many laggards. Most of the stocks that you're seeing, especially in the broad end of the markets, advances far outpace the declines. Well, first on the list is MCX. The company has gone ahead and launched the monthly options as far as MCX Bulldex is concerned. So analysts actually feel that this can be a significant kicker as far as EPS is concerned for MCX. The entire OMC pack today, so look at names like HPCL, BPCL, IOCL, some positive news flow coming in. One of the company where all of these three have a significant stake, which is Mozambique LNG project. Total Energies and partners have lifted the force majeure that was on this particular name. So all of the OMCs today have over 2%. RR Kabel, one name from the broad end of the markets, one of the top gainers there. Very strong volumes as far as RR Kabel is concerned. The top gainer as far as the NSE 500 is concerned. And the entire PSU basket, we've been talking about how most of these stocks are doing well today. The PSU banking pack, another day, we're actually seeing significant gains. Bank of India up almost 3%. On the other hand, on the back of muted show as far as Q2 is concerned, SBI Cards, like we mentioned, that particular stock, one of the biggest laggards today, over 2%. CESC, one of the top laggards on the NSE 500 index. And Zen Technologies, muted Q2. Execution is delayed. That stock too seeing quite a bit of a sell-off in the session today. Zen Technologies is the one that we're discussing.
All right, Vivek, thanks a lot for that. So that's about all the stocks. Meanwhile, just before we move forward, look at Indus Towers. That's a stock which is up 5%. A favorable move coming in on Vodafone Idea. It means that Indus Tower also gets a benefit of that by virtue of one of their stronger clients, or one of their clients, bigger clients, being in better hands right now. So after the Vodafone Idea verdict that came in, or the comments that came in from the Supreme Court, that stock moved higher, obviously. But the other beneficiary, Indus Towers, up nearly 5%. But let's talk about our Super Pro chart of the day. This is powered by Money Control Super Pro, a segment where we turn data into direction. Each day, we pick one chart that sums up the story driving the market and help you understand the why behind the what. And here's today's chart and what it means for the next market move. Polycab India is a chart on your screen. As you can see, a falling trendline bullish breakout, which signals a reversal from a downtrend as price breaks above the descending resistance line with volume. It shows a bullish momentum. And if you'd like to access more expert-driven insights and actionable chart patterns, like what you're watching on the screen, simply scan the QR code, which will come up for you on the screen, and subscribe to Money Control Super Pro. Plus, this festive season, there's more reason to celebrate as well. 10 lucky subscribers every day win 1 gram of gold. So don't wait, just scan, subscribe, and make your portfolio shine brighter with Super Pro.
Welcome back. Well, for the markets, it's doing well. So we currently have the Nifty, which is up around 200 odd points. We have the Bank Nifty, which is up around 460 odd points. Those are the most chip numbers which are flashing on your screen. The EBITDA has come in at growth of around 4.4%. So just about a flattish performance, or a little bit of a subdued performance, you'd have to say, on the margins, which have come in at around 11.4% at this point. Net profit, however, up around 25%. But nonetheless, let's talk about one particular stock that came out with its numbers on a Friday evening, which is Dr. Reddy's. Now, I'm not going to talk about the numbers because everyone has gone through that threadbare. So I'm just going to talk about a couple of key important takeaways from Dr. Reddy's this time. So what they are talking about when it comes to the key opportunity, semaglutide, they're expecting feedback from Health Canada, which is going to be one of the key markets for them in the next few weeks on semaglutide. So that's going to be a big trigger to watch out for whether or not they get approval. Remember that the semaglutide patent in Canada expires in Jan 2026. But what the company did say, interestingly, is that they can't rule out a complete response letter for semaglutide in Canada. They expect the Canadian market, however, to be competitive. So that is something that they are acknowledging. They expect the SEMA opportunity via partners or directly in the next 12 to 15 months to be in 87 countries. So that's the number of countries they're probably going to be present in. Notable countries besides Canada will be India, Brazil, Turkey when it comes to Dr. Reddy's semaglutide opportunity. They expect the volumes of around 12 million pens, which is basically used for semaglutide, to be absorbed in other countries, if not Canada. So they're confident about the opportunity. In fact, they're scaling up their fill and finish capacity. They are challenging patents in India on semaglutide against Novo Nordisk. Currently, it's in the Delhi High Court and awaiting outcome. What they can do in India is that they can produce in India and export semaglutide. Currently, they can only launch in India when the patent expires in March 2026, only unless there is a favorable outcome from the Delhi High Court, unless there is a favorable outcome. With regards to the rituximab biosimilar, they have received a complete response letter, so there will be a delay there. Guidance, 25% margins. They're maintaining commitment on margins. Growth is dependent on the semaglutide opportunity. So in the next 2 years, they're confident in terms of growth and margins. India, they can maintain above Indian pharma market growth. Goldman Sachs, neutral, target price of 12.25. Jefferies, underperform, target price of 11.30. Macquarie is neutral with a target price of 11.90. Let's listen in to the management who spoke to us earlier.
Likely that we'll see similar trends in all the geographies. In particular, we do see sustainable growth now in India, emerging market, API, Europe. United States, naturally, we are in the end of the contract of lenalidomide, so which is the main impact of North America, and as well as some price erosion for some few other products. So overall, what you're going to see is similar, because also in the next quarters, we will continue to see the decline of lenalidomide. So in the United States, that's what we need to see. And from there, it will start to go up once we will launch semaglutide in Canada, etc. So overall, in the next coming quarters, we should see similar trends. We are absolutely, once we will not sell any lenalidomide, there will be an impact on our profit. And we said, and it's consistent with that we are planning the following. So to your question, yes, we are planning to continue to have a double-digit growth in our sales overall. And this, which means that the other markets will offset less growth in the United States. The second is we are maintaining and cautious about the cost. We are containing the cost. We are planning to grow the cost less than we grow the sales, which means more profitability. Focus on key products like we discussed, abatacept, semaglutide, and others, and business development. We believe that between the four, over time, we will absolutely maintain the trends that we discuss all the years, which means double-digit growth, profitability, and return on capital.
All right, with that, we'll take a short break. On the other side, Ruchit Jain of Motilal Oswal joins in with some trading strategies. The Nifty nears that 26,000 mark. The mid-cap's doing a lot better. What stock should you bet on? Ruchit will tell you. Welcome back. As the Nifty moves higher, just keep an eye on one stock from the broader markets. That's Hatsun Agro. Reported its numbers a very short while ago. A 17% revenue growth, and that's led by the Milk Mantra acquisition that the company has done as well. And on top of that, we've seen the gross margins expand, and which has flown through all the way down to the EBITDA. The net profit has grown by 70%. So Hatsun Agro comes up for you on the screen, up 15% for that stock. Remember, has been a bit of an underperformer, has corrected about 15% from its 52-week high as well over the last 12 months or so. But good performance coming in, and the street taking note of that. But the other thing that the street has also taken note of over the last hour or so has been Vodafone Idea, as the Supreme Court has allowed the centre to reconsider the AGR issue. Ashmit joins in with more. Ashmit, it's a relief, a rope coming in for Vodafone Idea.
Well, indeed, a huge relief coming in. Vodafone Idea, of course, was here before the Apex Court asking for relief. They were asking for waiver of the penalty interest and the interest on penalty dues. There have been 4 adjournments sought by the centre. The centre kept asking for more time, saying that they're going back to the drawing board, coming out with a solution. Today, when the hearing began, they've not given a definitive structure of what the relief package will be like, but what they had sought for, essentially saying that allow us the flexibility to go ahead and to structure some form of resolution as far as this AGR issue is concerned. Now, the Apex Court taking note of 3 critical arguments. Number one, the facts on the ground have changed. Now, the government enjoys a 49% equity stake. In fact, at one point, the Solicitor General also remarked that by way of the government holding stake, it's also a case of public interest being at play. The second, the Solicitor General pointed out that, look, there are as many as 20 crore customers as far as Vodafone Idea is concerned. All of them will stand to get impacted. And finally, also saying that if the company goes away outside of the customers, competition in the sector will also get impacted. Now, on account of all of these factors, the Supreme Court saying that, look, this is a policy matter. The Supreme Court does not want to intervene, does not want to guide the hand of the centre. It does not want to prevent the centre from taking any measures for resolving this issue, and saying that given the peculiar facts and circumstances of this case, 49% stake, 20 crore customers at play, all of that factors coming into play, the Apex Court now allowing a free hand to the centre, saying that this is a policy matter. We don't want to come into the picture. The centre is now free. The DOT is now free to formulate, to restructure some form of solution as far as the AGR issue is concerned. The one question, of course, that many have left asking is that with this Supreme Court direction, will it be applicable to Bharti as well? That's a question that now the DOT, we understand, will have to give clarity on whether this relief package that the Supreme Court has granted blessings to will be pointed towards only one company or towards the wider sector. Back to you.
Okay, all right, Ashwin, thanks very much for that. So Vodafone at the best levels that we've seen since September of 2024. So good going for that particular stock, up around 4.5%. But let's go across to Mangalam now. He's at the F&O desk and he's going to tell us what he's watching in terms of F&O cues. Mangalam.
Just shy of that 26,000 mark. That's where we are at midday. And today has been a good start for the frontline index as well. And it's been led higher by the Nifty Bank. The broader market is doing a lot better as well. If you look at the contribution chart, you would see, the top contributors on the Nifty, all of them have been in good form lately. HDFC Bank has come to the party today. Reliance has been doing well ever since its second quarter numbers. And more importantly, now we have, Bharti Airtel, which marginally off highs, is also among the top contributors for the frontline index. But even if you look at the broader markets, you do have more stocks advancing than the number of stocks which are declining. So that would make people feel a little better. The only thing we'll have to watch out for from now on are 2 parts. One, post that 26,000 mark, are we going past that 26,104 mark, a level that we hit last week from where we saw a bit of a decline? And the second part is that ahead of expiry tomorrow, the India VIX is spiking. That makes the bulls a little jittery, because typically what you would want when the market is rallying is the India VIX to fall, because that would indicate that maybe put writers are fairly active in today's trading session. But that's not the case to be right now, because what's happened is it's more of a short covering move. We've seen the 25,900 call writers being caught on the wrong side. And as a result of which, as you can see, the open interest has come down, the premium has shot up, and that's caused a further up move in the market. But 26,000 put writers are equally active, telling you that support for the Nifty is around that 25,950 thereabouts. 26,100 call writers, they are still holding on to their position, so they don't believe that the Nifty goes past that 26,150 mark in tomorrow's trading session, which is the monthly expiry for October itself. And if you watch out for the put call ratio, it's coming at 1.16 as compared to 0.77. typically around 1.2, 1.25, it does tend to overheat and cool off. So short point, it's been a good rally so far. The next leg of an up move will come only past the 26,104 level that we hit last week. But a lot of stocks are fairly well bid. We've been talking about SBI Live, good numbers coming in, a lot of long positions backing that stock as well. Good numbers coming in for Coforge and Emphasis also, mid-cap IT doing well. And a lot of the shorts are caught on the wrong side there too. So short covering is powering these stocks higher along with the likes of Ashok Leyland.
Okay, Mangalam, thank you so much for that. Let's also bring on board Richie Jain of Motilal Oswal Financial Services to talk to us about the technicals now in terms of the market. Richard, good afternoon. Thank you so much for joining us. In terms of levels, Mangalam was highlighting certain levels over there. What are you keeping an eye out on? And when do you see support or a resistance in terms of Nifty as well as Nifty Bank?
Yeah, hi, very good afternoon. Well, if you see last 3-4 trading sessions of the index fund, we have traded within this broad range where 26,000, around 26,000, we are witnessing some selling pressure. But that higher top, higher bottom structure, which we have been forming on the index of late, that is still intact. So this clearly indicates that whenever we are getting in between declines, that dips are being used as a buying opportunity. And that's why the support base is shifting higher. So immediately, I think from a very short-term perspective, 25,700 needs to be seen as a very important support. Until this is intact, we can see tad higher levels towards 26,150. So although on a broad basis, it remains within a range, but overall trend remains positive, and hence any kind of minor dips towards the support should be used as a buying opportunity. And in such market, I think it's wise to focus more on sectoral or a stock specific approach, where since the broader trend is positive, whichever stocks are in an uptrend, they are usually showing good relative outperformance compared to the broader markets. So the trend remains positive, but within that, I think stock selection remains a key for short-term trading.
Okay, stock selection is the key for short-term trading. What are your stocks which you're selecting today then, Richard?
So a couple of names, where we expect a good outperformance. One is Ashok Leyland from the auto space. We have seen a good uptrend, recently in most of the auto names post that GST rate cuts. Now the stocks have seen some consolidation over last 1 month, but this entire consolidation just seems to be a time-wise correction within an uptrend. The 50 DMI has been acting as a good support for Ashok Leyland. So we expect a resumption of the uptrend from here on. With a stop loss below 134, traders can go long for potential targets around 152. And CDSL we like within the capital market segment, where post recent correction, the risk reward ratio is quite favorable at current levels. So traders can even go long at CDSL with stop loss below 1570 for potential up move towards 1700.
Okay, Richard, thank you so much for those stocks as well. And thank you so much for joining in with us this afternoon. But on that note, we're going to actually sip into a very short break now. On the other side, we'll have Manisha Gupta, who's going to be in conversation with Rishi Nathani, who is Chief Business Officer at MCX. Stay tuned in for that conversation.
Welcome back, and joining us on the show now is Rishi Nathani. He is Chief Business Officer at MCX. Rishi, hi, thank you for joining, and congratulations. Yet another product launch that happens today, and this is options on bullion index. One, what is the kind of participation moves that we've seen into this one? And this year clearly has worked out very well for MCX. More products being launched, records in sense of volumes as well. What is it, new product, that do for you?
Thanks, Manisha. So this is, I feel, is a missing piece which we had in terms of binding both gold and silver together. So today you have a contract in the form of our Bulldex options, which have 60% gold and 40% silver, and it allows someone to take an exposure to both gold and silver in one shot. So it's early days yet, but we are seeing a pickup in participation, and I hope to see a lot more participation. And this is the first index product we've launched in the commodity derivatives markets, and I hope that this product will do well and pave the path for many more products to come.
Oh, absolutely. Rishi, also, what is the kind of participation do you see into this one? Because one, as you mentioned, it's a risk management tool, and two, this is cash settled. So would you see a more a different approach onto this one?
Yes, because today, if you see that there are various reasons why this contract is more suited for someone who wants to do an absolute price hedge. Because one, the underlying of this contract is the 1 kg gold contract and the 30 kg silver contract, whereby the notional of both would be almost 1.75 crores, whereas you're getting this contract at 8.5, 9 lakhs. Secondly, this product is a basket of both gold and silver, so it makes it more simple. Thirdly, there is no devolvement of these options into futures since they are cash settled. So anyone can hold their positions right up to expiry and get the, in case they are in the money and they bought the option, then they can get the differential paid directly to them without having to worry about delivery. So a lot of benefits here. So anyone who's looking for an absolute price hedge, whether it's a hedger, an investor, or an institutional participant, I would say this is for those people.
Rishi, talk to us also about the kind of volumes that MCX has done this year. We've seen various numbers continue to grow as much as we peaked in the last time there was a run-up like that. Where is this majorly coming in from, and how would you look at metals and, as you said, options perhaps on other things could be coming in as well? So is energy next or is base metals next?
So as you know, we already have two more indices. We have apart from the bullion index, we have a metal index and an energy index. Now, depending on the success of this contract and as well as the requirements for the market, we will look into those contracts, and after, as and when we get approvals, we may look, if we at all decide to go for those contracts, then we may look to launch. Nothing sure as yet. However, having said that, volumes are picking up and participation is picking up, and we are seeing an all-round participation from every participant base. So whether it be the institutional participants, which is also ticking up, or the hedgers, because given this kind of massive global volatility, the need for hedging increases humongously. And of course, there is a lot of investor participation, because gold and silver, as we all know, Indians are, it's in our DNA. So there is a lot of participation from investors as well.
Oh, I can bet on that. Yes, gold and silver is part of our DNA in some sense. Rishi, would be interesting to know on what are the kind of deliveries that the exchange is looking at across various segments, especially gold and silver.
So we've been seeing robust deliveries across all our products and across all the segments. While I don't have the absolute numbers for you right now, whether it be our base metals or our bullion contracts or the agri contracts, wherever we have deliverable contracts, we've been seeing decent deliveries. Having said that, I would just like to mention that the exchanges are a platform for price discovery and price risk management. Delivery is just a secondary part, just to ensure that prices are anchored to the reality of the markets.
Point taken. Rishi, 2025 has, as I said, has given you more products, more volumes as well overall the exchange. Any more new products that you're looking at that you can share with us that are in the pipeline yet?
Yeah, we always have a healthy pipeline, and I told you this some time back also that we will bring a lot of products for you, and in the last few months you've seen 4 products being launched, and this is the 5th today, and hopefully we'll see many more to going forward.
Rishi, the way we've seen risk management happen on the exchange side as well, we've been looking at margins being increased, not just on MCX, we saw that on SEME as well, with the way gold and silver have been very, very volatile. Going ahead with the kind of open interest that we're looking at, and November is when that expiry also is, are we anticipating with the kind of price moves and the way the silver market especially was on a discount on MCX, premium perhaps in physical, all of that seems to be converging at this point in time, but how do you see the road ahead?
Margins are a function of volatility and risk management, and I feel that we've been rightly proactive in terms of increasing margins as and when the volatility increased. As we cannot predict the future, but as if the markets remain volatile like this, I believe that the margins will be calibrated accordingly. So on that side, and in terms of volatility or volumes, it's very difficult to predict, because as an exchange, as I always say, we are a neutral platform. It's more of analysts who you should be talking to who can tell you where the markets are headed.
All right, we take that point. Thanks a lot for that, and congratulations once again on the product launch. Thank you, Manisha, for taking us through that call. And just watch out for a couple of these dairy stocks. We were speaking about Hatsun Agro rising about 15% on the back of their numbers. Obviously, a lot of it is also aided by consolidation or acquisition of the Milk Mantra business. But watch out for Dodla Dairy and Parag Milk on the back of gross margin expansion that we've seen year on year. Both the other companies have also seen a spike. The street expects improvement in margins for these companies as well as we move into the second quarter results and thereafter as well. There was commentary on dairy milk procurement prices for Nestle as well, where they had said they expect milk procurement prices to come down, which is net margin positive for these guys. Take a short break, come back. We get chatting with the management of Supreme Petrochem to record their second quarter earnings. Stay with us.
Welcome back. Well, for the markets, it's turning out to be a steady session. So we are up around 0.7% at this point in time. We have the Bank Nifty, which is at around 58,120 as well. So good levels coming in there. But one particular company is showing some amount of weakness today. That's Supreme Petrochem, which came out with its numbers. It's down around 2% at this point in time, and on a month-to-date basis as well, it's lost around 5 to 6%. But you have to admit that on a year-to-date basis, it's still resilient with a gain of around 18 or 19%. But this time round, the numbers have looked weak. The revenue is down around 27%, margins at 7.05%, and the profit has been a steep decline of around 47% on a year-on-year basis. We have Rakesh Nair, who's the ED at Supreme Petrochem, to take us through the numbers this quarter. Mr. Nair, thank you very much for joining in. Well, definitely a disappointing quarter for you all. Just take us through your volumes this time. We understand that it fell around 5.6% this quarter. What led to that volume decline and the pricing? What was the pricing decline like this quarter, or the movement? And what can you guide on these two parameters for Q3?
Good afternoon. This quarter was tough for us. There were multiple reasons for that. One is the extended heavy monsoon, which dampened the sale of cooling devices, resulting in lower lifting by the OEMs. Secondly, the intimation of reduction in the GST rates in mid-August, which resulted in the deferment of buying decisions by the OEMs and their molders and the consumers also. Thirdly, the trade barriers all over the set up by the US, which resulted in the change in the trade flows globally, and also weakening demand from Europe. And lastly, the styrene prices, because of the crude prices were also falling, the styrene prices also fell from almost a peak of $940 end June to $800, which is today now. So all these reasons, one, our selling prices dropped also because on the back of the lower raw material prices. And the margins were also under pressure, as well as the volumes, both in the domestic market as well as in the exports, they were under pressure.
So what is
all these reasons, sorry, yeah.
Go ahead, but what is Q3 looking like when it comes to pricing and volumes?
See, the pricing essentially is a matter of raw material price also. So if the raw material prices are at these levels, the prices will also be at the similar levels which are prevailing today. And as far as the volumes are concerned, generally December also, the first half of this third quarter is generally a weak quarter post-Diwali. But then the issues like tariffs, barriers by US, and also the Europe demand being weak, and also large capacities built by China, they are the issues which very difficult to predict today. I wouldn't hazard any guess as far as the next 6 months are concerned, but I can only say that our volumes overall would be better than last year. But then at quarter-wise volumes, I won't make any guess today.
All right. So just roughly what proportion will they be higher by on a year-on-year basis?
I wouldn't make any guidance on that today
Right.
because of all geopolitical issues which are there today.
Right.
It's tough to predict.
Okay, we take that point. But what's also in your control and is among your triggers going forward is the ABS plant, which started commercial production. What could that do to your revenue? And you acquired Xmold as well, which obviously has exposure to the auto space. So with this ABS plant starting and Xmold, what could your mix be when it comes to business coming in from the auto sector? How much is it right now, and what would it be from here on?
No, right now, see, we just started our ABS production, and the trials are on with the various processors. And once the whole material is accepted by the market, and if any changes are needed to be made in certain grades, that would be made. And post that, I would say that the actual sales with the autos will start, and that would take at least next 5 to 6 months.
And what's your target here from the auto sector? How much do you sell to them right now?
No, we don't sell to them right now. We don't sell to them. Though our Xmold, which we acquired this year, has necessary approvals from the automobile sector. But currently our ABS is just started and we are not selling it to any automobile sector.
Right. Also, I just wanted a couple of points. I wanted clarification. So now, in terms of you highlighted points, why you saw weakness in Q2, but are you seeing better inquiries overall? And export also, if you could highlight that. Is there any improvement there, or are there any specific geographies which are still facing a lot more pressure?
Europe is facing a lot of pressure. US is practically no for us now. It's the Gulf, it's the Asian countries where we are concentrating right now.
Okay.
And as far as the domestic market is concerned, after Diwali, generally it's a lull period. But starting in mid-November, end November, the actual lifting will start by the OEMs also.
Okay, and for the full year, do you think you will be able to maintain that 10 to 11% revenue from exports, or will it be lower maybe in FY26, given some geographies are facing issues?
Exports, we will still be able to manage, but then the overall volume guidance which we had earlier given, I don't think we'll be able to meet that with the kind of issues we are facing currently and the last 3 months we faced. So I wouldn't make any guess as far as the overall volumes are concerned, but domestic, I'm sure that we will be able to achieve 10% growth.
Okay, so domestic, you will achieve 10% growth. What was your earlier volume guidance?
Sorry, I said we will achieve 10% growth on exports.
On exports. What was your earlier volume guidance, sir?
We had earlier given a volume guidance of 10 to 12% for the year as a whole for all products put together. But then I won't make any guess at the moment on that, as I explained.
All right. And that's a fair point there. But you did mention that you're focusing on the Gulf now. Do you think that, when do you think business will start picking up in terms of momentum for you to formidably show in your numbers?
No, business is going on as far as the Gulf or the Asian countries are concerned. The business is going on.
No, for it to compensate on the loss on the businesses where, your geographies are showing pressure, for Gulf and other geographies to probably compensate for the others.
It's a work in progress always, and we are increasing our volumes there. We are concentrating, but then with the change in the trade flows, even there is a competition today because the other countries who are concentrating on the other markets are also focusing on these areas. So, but then we are there already there. We have customers there, so we have some kind of an edge, and we are working on that.
What's your outlook on margins from here on? And just to press further on that ABS point, 5-6 months you will get orders coming in. You will settle in on who your customers would be. You spent about, what, 850 crores, or that's the earmarked capex for this plant?
No, that was for both the phases.
Okay.
And we have only just completed the phase 1 and the infrastructure and the utilities for the second phase.
And what is the typical, asset turnover in a plant like this?
It's generally at 2 times.
So you can, from the current phase, do about 800 crores of revenue, and when both the phases are done, about 1700 crores overall.
Yes, that's so.
And that would be entirely from the auto space, or there would be other clients as well?
No. The auto space is one part of it because in appliances it is used also. It is used in toys, it is used in stationery, it is used in multiple small appliances also. So ABS has multiple uses, two-wheelers, batteries, everywhere they are there.
So what would the margin triggers then be?
In today's environment, very difficult to predict on the margins, please.
Okay, and just a quick one, value-added products in Q1, it was around 36% of your overall total revenue. You said it would move up somewhere around 40% because of this ABS plant coming in there. By when will this 40% come for value-added products then?
We hope that by the year end, we should be there at 40%.
By the year end, you will be there. So then, wouldn't that improve your margins a little bit more, given that you would see more value-added products?
Yes, margins would improve. On those, that 40% will certainly improve our margins. But then, as I explained, that everywhere else, the margins are under pressure today. So how much will it make total impact on overall volumes of the company is very difficult to predict today.
Okay, all right. So we're going to leave it on that note. Thanks very much for joining in and speaking with us, and best of luck for what seems to be a little tough environment for Supreme Petrochem. As you can see, the stock is down around 2.5% at this point in time. Well, we'll need to take a short break, but a quick note for our viewers. As you can see on the screen, there is a money control stock score just above the line graph. And this is a score which is assigned to each stock based on Money Control's multi-factor algorithm. It's calculated by analyzing over 40 parameters, including both current and historical financial statements, price charts, and technical indicators for each stock. Each of the individual parameters considered for calculation of the 4 factors are assigned a score, which is then aggregated to arrive an overall Q factor score, G factor score, V factor score, and T factor score. Remember, this is not a buy or sell recommendation. Any investor viewer is advised to carry out necessary diligence on their own or through a certified registered financial advisor for investment decisions.
Welcome back to Halftime Report on CNBC-TV18. Looking at the Nifty right now, it's come off the day's highest point. Right now, it's holding on to gains of 180 points. 25,977, around that mark is what the Nifty is trading at. So let's keep an eye out on that one. Nifty IT, that's the one also that has seen a bit of a downtick from the day's highest points. And the last one, a slight bit of a fall from the day's highest point. But nonetheless, they're still managing to hold on to gains. So there's no complaining on that front. Overall, when you're looking at it in terms of the top losers today, we have Zen Technologies that's down and out. We have Gujarat Fluoro that's among the top losers coming in for the Nifty 500, as well as Ola Electric, which is also seeing a sharp fall of almost 2 to 3% in today's trading session. Specifically in the last 1 hour, what has not done well is Shipping Corporation of India. That's seen a fall of around 2% in just the last 1 hour. So that is something that we'll be keeping an eye out on. Other than that, Vodafone Idea has come off the day's highest point, still trading in the green after the AGR case due announcements that has come in, and obviously positive for Vodafone Idea. We've seen an uptick coming in for Vodafone Idea Indus Towers, but that has come off the day's highest point. And last one, Poonawalla FinCorp. That's the next one that has seen a bit of a fall. So keep an eye on that one. That also is down 2% in the last 1 hour. Overall, a lot of gainers in today's trading session. Look at First Source trading away in buzzing in trade, 8% gains there. Chennai Petro, E-Clerks, all of them managing to hold on to very good gains. But yes, a bit of the day's highest point is what we're closing halftime report with. Nonetheless, holding on to 0.5%, more than 0.5% of gain for the Nifty 50. With that, it's a goodbye from me as well as the team who put this show together. Thank you so much for tuning in.